Hi, welcome back to Joe Blogs. In today's episode, I want to talk about real estate, property, housing, whatever you want to refer to it as, and ask the question as to whether or not 2023 is a good year to buy property, a good year to sell property, or a good year to avoid the market completely. So in this episode, we'll look at exactly what drove the housing market to record highs over the course of the last 18 months. We'll talk about the impact of the COVID pandemic and then Russia's invasion of Ukraine, what's been going on with regards to interest rates, which obviously have a direct relationship to mortgage rates and the cost of borrowing. We'll look at exactly what's happened to house prices over the course of the last 18 months. And then we'll look at the latest forecasts for 2023. And then finally today I'll wrap up with my summary as to what I think is likely to happen in the housing market over the course of the next 12 to 18 months. And whether or not now is a good time to buy, sell, or do absolutely nothing. So before we get into all of that, if I could ask you for a thumbs up at some point during this video, if you're enjoying the content, please subscribe if you haven't done so already. Don't forget, I always include chapters, so if you don't have time to watch everything, you can pick and choose what you'd like to see. And if you'd like to support the channel, please have a look below where you'll find links to YouTube, super thanks and membership, as well as buy me a coffee and Patreon. And as always, I'd like to say thank you so much to everyone that has supported the channel. And as you can see, I've gone for a slightly different lighting setup today. I've got another light, and now I'm starting to play around a little bit with the colours and a little bit of background lighting and the foreground lighting. So please let me know what you think. Hopefully you think it looks a bit better than it did previously, but if you don't, then please let me know that as well. Warren Buffett is probably the most famous investor in the world, and like him or loathe him, he has been very successful. And one of my favourite quotes from Warren Buffett is, "Be fearful when others are greedy, and greedy when others are fearful." And I wanted to apply that to the housing market because right now, everybody is very fearful as what's going to happen. Everyone is expecting property to crash, but the big question is that realistic? Does property follow exactly the same movements as the stock markets? Or is property an entirely different sort of investment? Because with property, you don't just put your money into it and hope that it increases in value in the same way as you would if you bought Tesla shares. You actually get some value out of property by living in it or somebody else living in it if you're renting it out. So it has entirely different characteristics to a straightforward financial investment. And in today's video, I really wanted to dig down into that and talk about whether or not now is a good time to buy or sell property. But before we lift the bonnet and get into the detail on what's happening with prices and forecasts, I thought it was worth looking at the bigger picture as to what's driven the movements in the property market over the course of the last 2 years. And the current real estate market really took off during the COVID pandemic in 2020. At that time, the vast majority of the world went into lockdown. A lot of companies closed their doors and told all of their employees to stay at home. And this really caused a revolution in terms of working practices because people who previously had to be in the office 5 days a week suddenly were having to work from home. And we saw an explosion in software such as Zoom, Microsoft Teams, and Google Meet, whereby companies and individuals are hosting meetings with people all across the world. And what we found is that they were actually quite productive. You didn't really need to sit around the table to get things agreed. You could do it remotely. And this really changed the world in terms of real estate because places that people considered previously to be unrealistic to live in because they needed to go to work suddenly became a target to move to. So you could move to the coast or the mountains or the middle of the countryside or wherever you wanted to. And at the same time as that was happening, what we saw is central banks reducing interest rates to virtually zero all across the world. And this move was done predominantly to reduce the interest burden for all companies and individuals that had debt at that time because they weren't able to earn as much money. And so governments wanted to make sure that the pressure was relieved and that everybody could get through this period until we came out of the other end. But the unexpected consequence of reducing interest rates was that mortgage rates also fell dramatically. And we saw the best rates that have ever been available in the history of mortgages. And so the combination of people having a desire to move and also very cheap finance led to an explosion in demand for property. And we saw the market going crazy. The market for real estate was the new gold rush. It was a feeding frenzy. People couldn't buy property quickly enough. And we heard lots of stories of people buying property without even visiting it. They were just looking at particulars on the internet and bidding significantly above what the asking price was. So this was a crazy time. And over the course of the last 2 years, we have seen property prices go to record levels in most markets around the world. Property buyers are stretching themselves to the absolute limit because debt was so cheap it became affordable. Now, as the COVID-19 restrictions started to be lifted all around the world in 2021, we saw demand take off. People had been cooped up in their homes for too long and they wanted to get back to normal. They wanted to go out and socialise and buy things, and we saw the demand for virtually everything take off. And if you're a regular viewer of the channel, you've probably heard me say a million times before that when demand goes up and supply is limited, then that pushes up prices. And that's what we saw all around the world in 2021. Inflation started to take off. And then Russia decided to invade Ukraine. And what we saw as a direct result of that was that the price of commodities such as oil, natural gas and food all increased in price dramatically, and that put further pressure on inflation. And in order to tackle those high levels of inflation, central banks all around the world started to raise interest rates dramatically. And over the course of the last 12 months, we've seen increases in the vast majority of countries in the world. So the big question now is, has what's happened over the course of the last 2 years created a bubble in the real estate market? And is that bubble about to be burst by the rapid increase in interest rates that we've seen over recent months? So let's have a look at what's been happening to property prices over the course of the last couple of years. Now, obviously, property markets differ all around the world. There are different characteristics. So I can't talk generically about the world property market. I need to give you some specific examples. Now, this channel is watched by every single country in the world, but it's not realistic for me to be able to go through over 200 different property markets. So what I'm going to do in today's video is focus in on the biggest markets in terms of the audience for Joe Blogs, and they are the USA, the UK, Canada and Australia. But the characteristics of these markets are actually very similar. You'll see from today's data that what's been happening is pretty much universal in all the markets. So the takeaways from today's video really do apply to pretty much every market in the world, maybe with the exception of China, because what's happening in China right now is very different. And if you want to know more about that, have a look at some of the videos that I've been posting recently. This chart shows the movement in house prices in the USA over the course of the last 5 years. You can see that between 2018 and the start of 2020, the market was moving in a normal fashion. There was actually a slowdown in the real estate market in 2018 and 2019. However, from the start of the COVID pandemics, you can see that there was a rapid increase in house prices. At the end of the first quarter of 2020, the annual increase in house prices was around 5%. However, by the end of 2020, it had increased to 12%, which is more than double the rate that had been seen at any period during the previous 2 years. However, price increases didn't stop there, and by the middle of 2021, the annual rate of increase was up to around 19%. And it goes without saying that this is an average for the whole US market. But when you're looking at averages, obviously there'll be some areas that are significantly higher than this. And that's why you've heard stories of some markets even doubling in value. Now you can see that in the second half of 2021, the rate of increase actually dropped a little. However, it was still running at around 18%. And as we went into the start of 2022, we started to see the market taking off again, and we got back up to around 19%. However, if you look at what's happened in 2022, you can see the direct impact of Russia's invasion of Ukraine, which started on the 24th of February. And as we went through 2022, we saw the Fed starting to increase interest rates. So this lifted the cost of mortgage borrowing and caused nervousness in the property markets as people were worried that these high levels of growth could not be sustained. And over the course of 2022, we've seen the annual increase in house prices drop from around 19% to the current year-on-year level of around 10%. Now, when you look at a graph which shows the 12-month rolling average, obviously you can see the trend. So you can see there's a clear downward trend on this chart. But to get the real detail as to what's going on right now, you need to look at what's happening on a month-by-month basis. And this chart shows the movement in house prices in the USA over the last 12 months. So the figures showing on this chart are the percentage movement against the previous month. So this isn't a 12-month rolling basis. This shows how house prices this month compare to last month's prices. So what you can see here is in the first 4 months of this chart up until the end of February 2022, there were month-on-month increases in prices, so the annual range was still going up at that point. However, immediately following Russia's invasion of Ukraine, we started to see a reversal in that trend, and then monthly increases started to reduce. And by June, the monthly increase was down to 0.1%. And by July and August, we actually saw a fall in month-on-month house prices. And of course, if you're looking at the trend here, over the course of the last 7 months, there is a significant downward movement. Now, this chart shows the movement in UK house prices dating back to 2006. And we've got a scale on the left-hand side that ranges from 15% positive down to 20% negative. And the reason that I wanted to show this chart was really to highlight the fact that property prices move in cycles. So there'll be periods when they're going up and then periods when they're going down. And you can see that over the course of the last 16 years, there have been some marked cycles in UK house prices. The most extreme fall in the market was 2007-2008 during the global financial crisis, when we saw banks going bust and having to be bailed out. But you can see that there was almost an immediate bounce back over the course of the next 2 years, and house prices did recover significantly. Now, following that recovery, there was another hangover when prices came back down again. We then saw prices rising steadily up until 2014. They dropped off again for a couple of years, and then between 2016 and 2020, we saw the annual rate of increase of house prices slowing. However, in line with what we've just seen from the US market, in 2020, there was a sharp increase in the growth of house prices. In April 2020, the 12-month movement in house prices was positive 0.7%, so not very much. By the end of 2020, house prices had increased by 7% year on year, and by June 2021, the annual increase was up to 13.3%. However, since that time, the increase in prices has started to reduce significantly. And this chart shows the movement in house prices over the last 12 months in the UK. And you can see that up until June 2022, house prices were still increasing. However, over the course of the last 6 months, we've seen a complete reversal of that, and we're now seeing reductions in prices. This chart shows the movement in house prices in Canada over the last 5 years, and you can see that the shape is virtually identical to the chart that we saw for the USA. Between 2018 and 2020, we had a normal market where prices were bumbling along. However, as soon as the pandemic kicked in, we saw house prices starting to take off. By the end of 2020, the annual increase in house prices was up to around 5%. And by the middle of 2021, that had increased to around 12%. House price growth stayed at those elevated levels until the end of 21. However, during 2022, we've seen a marked reduction in the market. And this chart shows the month-on-month change in house prices. And you can see that since March, there has been a complete change in the market. Initially, there was a slowdown in the increase in prices. However, over the course of the last few months, we've actually started to see prices coming down. This chart shows the movement in house prices in Australia dating back to 2006. And once again, you can see the cyclicality of the market. We've got periods when prices are going up and periods when prices are coming down. And the three lines on this graph, the red line shows the average price for all properties. The black line charts the movement of the mid-price houses, and the grey line charts the movement of the lower end of the market prices. And I think what's really interesting to note about this chart is that it's different to the other three charts that we looked at. It's got the same characteristics in 2020 and 2021, where we saw a rapid rise in house prices. However, the actual percentage movement in house prices is significant. It got to above 30% at one point in 2021, so a real spike in prices. However, the reduction in house prices in Australia started far earlier than it did in the USA, the UK or Canada. And prices over the last few months have fallen significantly, and the 12-month rolling average is currently sitting at a negative 13%. Now, as we discussed at the start of the video, one of the key drivers for the property market over the course of the last couple of years has been the huge reduction in borrowing costs. We saw mortgage rates coming down to record low levels. But over the course of the last 12 months, they've started moving up again. So let's have a look at exactly what's happened and where we are today. This chart shows the average 30-year mortgage rate in the USA over the course of the last 5 years. And for viewers watching outside the USA, it's common for buyers to take a 30-year mortgage. So that means that you've got your rate fixed for the next 30 years. So even if interest rates go up or down in the future, it will have no implication in terms of your monthly cost. So what we can see is that back at the end of 2018, the average cost of a 30-year mortgage was running at around 5%. However, between 2019 and the start of 2021, the cost of that same mortgage dropped to less than 3%, and that is a significant reduction. It then sat at around 3% for the whole of 2021, and this was the time when the feeding frenzy was happening, when people were running around buying real estate like crazy. However, since the start of 2022, mortgage rates have started to move up, and they've moved up significantly. So they passed the 5% level that they were at in 2018 during the first quarter of 2022. They then increased to a peak of around 7% towards the end of 2022. And they're now down to around 6.5%, which is obviously higher than the long-term average if you look back to what was happening in 2018 and 2019. This chart shows the movement in the average mortgage rate in the UK over the last 5 years. And for viewers outside of the UK, there's a real mixture in terms of what people do when they're buying property. Many buyers do take a fixed rate, but those fixed rates will only be for a limited period of time, often 2 or 5 years. So that means that at the end of that period, those buyers will then be exposed to whatever's happening in the open market. So there is a possibility that buyers could experience a huge increase in interest costs once their fixed period ends. So if we look at the period prior to 2020, you can see that the average mortgage rate was running at around 4.25%. During 2020, that dropped down to around 3.5% and remained at that level until the start of 2022. However, over the course of the last 12 months, we have seen a rapid increase, and average rates are now close to 6.5%, which again is significantly higher than the long-term average. This chart shows the movement in 5-year fixed mortgage costs in Canada over the last 5 years, and you can see that it follows a very similar trend to what we've just seen for the US and the UK. Prior to 2020, the average rate was running at around 4.25%. During the second part of 2020 and throughout 2021, those rates dropped down to around 3.25%. However, in 2022, there was a significant increase, and the current average 5-year rate is sitting at around 6%, which again is significantly higher than the long-term average here. And finally, this chart shows the movement in the average mortgage rate in Australia, which is identical to the other three that we've just looked at. Prior to the pandemic, the average rate was running at around 4%. We then saw it drop to closer to 2%, and it's now above 6%, which again is far higher than it was prior to the pandemic. So the key question now is, what's going to happen to property prices in 2023? Are we about to see a major crash? Is the combination of the increase in interest rates and the nervousness about a global recession going to lead to everybody wanting to exit from the property market, and will we see prices tumble? Well, let's firstly have a look at some forecasts made for the US market. Real estate brokerage Redfin is expecting home sales to fall to their lowest level since 2011. However, expects the market to recover in the second half of the year. They're forecasting that the 30-year mortgage rate will come down to around 6% by the end of 2023, and that house prices will post their first year-on-year decline in a decade, but that the US will avoid a wave of foreclosures. Realtor.com are saying that 2023 will be a nobody's market for buyers and sellers. And they're forecasting that the volume of existing home sales will fall by 14%, but that the average price will go up by 5.4%. So basically what they're saying is that there'll be a contraction in the market, and because of that smaller market, prices will still be going up. Zillow are forecasting a continuation of the slowdown in the market, but they're expecting that house prices will increase by 0.8% over the course of 2023. And finally, CoreLogic are forecasting that house prices will increase year on year between August 22 and August 23 by 3.2%. So overall, the market commentators are fairly positive on the outlook for the US market. But let's have a look at what's happening for the UK. The forecasts for house prices in the UK are far more pessimistic. Savills, which operate a chain of real estate agents, auction houses, and have an extensive research department, and are seen as being one of the leading commentators on the property market in the UK, have forecast that the market will fall by 10% in 2023. And there won't be an immediate bounce back, with house price growth moving into positive territory slowly in 2024 and then recovering in 25 and 26. In terms of the Canadian property market, the Canadian Real Estate Association and Desjardins are forecasting that there will be a steep reduction in sales volumes, which is shown on the green line of this chart, and are expected to fall by almost 50% during 2023. And alongside that fall in volumes, it's expected that prices will also come down. And Desjardins are forecasting that the average price could fall by 25% in 2023. Westpac Bank senior economist Matthew Hassan has forecast prices nationally to fall by 16% from market peak to trough, and expects larger declines of around 18% in Sydney and Melbourne. And he's not expecting prices to rebound until 2024, when he's forecasting a 2% rise. So what's the summary and conclusion today? Well, I wanted to post this video because I know a lot of viewers are interested in property. Either you own property or you're thinking about buying property, or maybe you're even thinking about selling your property. Do you tap out at the top of the market? And so I wanted to share some data with you today to really explain what's been happening in the property market, where we're sitting right now, and what's likely to happen in 2023. And of course, all of this is linked to what's happening in the wider global economy. And if you follow the channel, you'll be fully aware of what's been happening with regards to inflation and interest rates, and the fact that we're potentially moving into a global recession in 2023. So all of those factors have influences on the property market. But as I discussed right at the beginning of the video, the property market is unique. It's different to the stock markets. It's not just about how everything's doing. Is it making a profit? Is it going down? Is the economy going to go into recession, therefore prices drop? Real estate has intrinsic value, so it's not just an investment. You get the value from living in it day to day. It's also illiquid because it takes a long period of time to buy and sell. So people don't sell on a whim. You don't wake up one morning and think, I'm going to sell my house today, and by the end of that day, you're done and dusted, like you could with stocks. And of course, the other factor relates to the debt that you've got, the mortgage that you've taken out. And I think what we've seen today from the 4 different markets that we've done a deep dive into is that we've got different characteristics because of the way those markets have been structured. Most buyers in the USA take out a long fixed term rate on their mortgage, quite often 30 years. So what that means is that once you've locked in that rate, if you don't move house, then you know exactly what your repayments are going to be for the next 30 years. So it doesn't really matter what's happening outside the window, what's going on with regards to current interest rates and the war in Ukraine and all of that sort of thing. Because as long as you can afford those repayments, you're fine, you're done and dusted for the next 30 years. And I think what we've seen is that the US market is expecting to be the least impacted of the 4 markets we've looked at because of those characteristics. Because all the existing buyers are thinking, I don't need to sell. I'm not a forced seller because the cost of my mortgage hasn't gone up dramatically. Now, obviously, new entrants to the market, people who want to buy property tomorrow, will have to take on the newer rates. So that does have an impact in terms of all of the new buyers and people wanting to trade property. But the impact on existing homeowners is far lower than it is in the UK, where most people take a very short-term fix, might be 2 years or 5 years at best. So all of those people are now concerned that when that 2-year fix ends, they will see a huge increase. So a lot of people took on fantastic rates of 1.5–2% during the pandemic, but those rates will be coming off at some point over the next 12 to 18 months. And when they do, those people will suddenly see an increase from 2% to maybe 5 or 6% overnight. And that could mean that those mortgages become unaffordable for those individuals, and then they become forced sellers. And if we get to a situation where there are thousands of forced sellers, there will be a flood of properties coming onto the market, and therefore supply will go up and demand may be flat or go down, and that means that prices will go down. And that's what we're starting to see already in the UK. We're seeing prices going down. And as we saw from the forecast, Savills are saying that they think that prices will fall by 10% in the UK in 2023, which compares to the forecast price increases in the USA. And the forecast that we saw for Canada and Australia for 2023 were also negative. And again, that ties into the fact that many people are taking mortgages on a much shorter term fix than they are in the USA. So the USA has a good long-term stable base of existing homeowners who don't need to move, whereas these other markets are more susceptible to what's happening with interest rates. And as you'll know if you watch the channel, interest rates have gone up significantly over the course of the last 12 months. Now, of course, nobody really knows what's going to happen in 2023 because the other major factor is what's happening in the global economy. So the forecasts that we've just been through assume that everything stays as it is at the moment, what we're expecting to happen. However, if the war in Ukraine carries on, if that escalates, if more countries get drawn into it, which is a possibility, there's a lot of things going on right now with a lot of countries being asked to hand over tanks and other military support. If that carries on, and if Russia decides that they're not happy with that level of support and starts making threats to other countries, then we could see a deterioration in the global economy. And if that happens, then obviously that would have a direct impact on the property market from a negative perspective. In terms of the overall position, I don't don't think there's major upside in the property market right now. I don't see prices rising dramatically all across the world. But I think there is some potential downside if we do see the global recession starting to kick in, and if that recession is worse than expected. So in order to answer the overall question as to whether or not I think 2023 is a good year to buy property, I think firstly it depends on your circumstances. If you're at the point of your life where you want to make that purchase and it's going to be a long-term forever home that you can get a long-term mortgage on that you know you can pay, then any time is a good time to buy because you'll lock in that deal and then you can live there for a very long period. If you're looking to speculate, if you're thinking about buying property to make a short-term gain, I don't think now would be a good time to do it because there is more downside than upside right now. I don't see prices rising dramatically, but I could imagine a situation where prices fall significantly. So I think from a speculative point of view, I wouldn't be buying property. If you're going to do it as a long-term purchase, then over the long term, when you look at prices, they have gone up over the last 20 or 30 years. So long-term, you'll be fine. Short-term, I think there's a lot of risk. And in terms of the question as to whether or not you should sell property, well, again, that relates directly to your personal circumstances. If it's an investment property that you've been holding just as an investment, then maybe now's a good time to cash out on that because prices are still good, they're still high, and I don't think prices are going to rise significantly over the next 12 months or so. But if it's your home, if it's where you live, and you're going to have to move home, you need to factor in how much it's going to cost to move, how much it's going to cost to buy the alternative property, and whether or not you can afford to pay for that alternative property over the longer term. So hopefully if you are in a situation where you're thinking of buying or selling, this video has proved to be useful to you. It's given you some data, looked at some analysis and looked at some forecasts to give you an overall feel as to where we are right now and what's likely to happen. If you've liked the content of today's video, then please give me a thumbs up and thank you so much for watching this video all the way through to the end.